Real Estate Appraisal, 8%.
I'm Getchin Share with HomeSnatch Realty, and I thank you for watching. And if this is your first time on this channel, please consider subscribing and click on the bell to be notified when I post new videos. In this episode of Let's Talk Real Estate, I will go over 20 questions, multiple choice questions, designed to help you pass the Florida real estate exam. Let's get right into it.
Number one, the most common type of value estimated by an appraiser is blank value. Well, that would be market value. Market value is what an appraiser typically will evaluate in appraising a property, let's say for sale. So obviously the most common reason a person would hire an appraiser is to determine the market value. As you can see, the bolded letters are basically giving you the cue to the answer. Number two, an appraisal is an act or a process of developing and blank of value. An appraisal is simply an opinion of value. So the appraiser is simply estimating the value. Number three, the amount that should be paid in a transaction is the blank of the property. Simply put, the amount that is paid in a transaction is typically the market value. That is why a bank would have you do an appraisal to determine the market value of the property. Number four, the principle of blank states that value in the present is based on the benefit to be received in the future. That would be the principle of anticipation. Anticipation is what's going to happen in the future. That is the essence. That's why people invest in real estate, because of the anticipation that it will be worth more in the future. Anticipation is simply an expectation of value, an increase in value. Number five, the blank of an appraisal is to estimate some type of defined value. Again, the purpose of an appraisal is to estimate some type of value. The value could be many different types of value. You have investment value, appraisal value, assessed value, many different reasons. Number six, a property with an inefficient floor plan would suffer from blank obsolescence. That would be functional obsolescence. An efficient floor plan is, for example, let's say a property with 5 bedrooms and 1 bath. Back in the old days, back in the 40s, 50s, even maybe, 40s, 50s, that might have been perfectly fine because of the lifestyle people had back then. You had you had a family of 4 or 5 where the breadwinner would get up, go use the shower, and head out. And then subsequently, the oldest kid would get up, shower, go to school. The younger kid would get up, go to school. And the youngest one, the parent, whichever parent that was home, would prepare that child to go to school. So you can see everybody could function in a property that had 5 bedroom and 1 bath. Well, move forward to today's standard, that would be inefficient because most people are leaving the house at about the same time. Everyone in the household is pretty much rushing out at about the same time. And more importantly, think of it this way. Back in the 40s and 50s, one of the most expensive feature of a house was the bathroom. So the bathroom would have been a more expensive. But generally speaking, if the floor plan is not up to today's standard or current standard, that would be considered functional obsolescence. The property is not functioning. It's not efficient. Number 6, external obsolescence is blank. External obsolescence is incurable. Well, what does that mean? External obsolescence simply means, also referred to as economic obsolescence. It simply means that something outside your property boundary is affecting the value of your property. Therefore, there's nothing you can do about it, such as, for example, you paint your house, you maintain your yard, your property is perfectly nice, looks great. However, your next door neighbor, their paint is peeling off, their grass is golden brown. You can imagine how that property can affect your property. Another scenario, you live near a busy street, so the noise pollution, that's affecting the value of your property. So you can see those are things you cannot really do anything about. So therefore, they are incurable. Incurable means cannot be repaired, cannot be fixed. Number 8, the amount actually paid in a transaction is referred to as the blank. Very simple. The amount that is paid in a transaction is the price. Price, value, and cost are 3 different concepts. But here they're asking you the amount that should be paid or that actually is paid. So the amount that actually paid is the price. Number 9, how the appraiser's client will use the appraisal is the appraisal blank, blank. Well, the way a person uses the appraisal or will use the appraisal is the intended use. You buying a property, then you're looking at the market value. If you're an investor, you're looking at the investment value. If you're the county, well, although they are using the market value, but they're doing an assessment for tax purposes that is called ad valorem value or assessed value according to the value. Number 10, if the subject property is superior to the comparable property, the blank property should be adjusted blank. Well, here, if the subject property is superior to a comparable property, the comparable property should be adjusted upward. I've put some notes here for you. This is very important to understand. You always make any adjustments to the comparable. You never make any adjustment to the subject property. And the formula is very simple. CIA CBS. CIA means if comp is inferior, you add, meaning you adjust upward. If comp is better, subtract, meaning you adjust downward, but always to the subject property. And as you can see, it says the subject property is superior to the comp. So therefore, the comp is inferior. So we are in the CIA portion. Therefore, it will be adjusted upward. Let me take a moment to say thank you for supporting. And if you have not subscribed, it's very simple. Just hover over that picture at the bottom of your screen and click subscribe, and you can check the bell to be notified when I post new videos. Number 11, a home has a poor interior traffic pattern. What type of adjustment might be applied when valuing the property? We just discussed that. That would be D, functional obsolescence. Again, you can see I highlighted the fact pattern for you. And like I said several times, you've heard me say this quite often, the question itself will implied or will provide you enough clues to get you to the answer. In fact, they will give you the answer in the fact pattern. Poor interior pattern applies functional obsolescence. Number 12, if the comparable property were better than the subject property in size, what adjustment would be appropriate? In this case here, the adjustment will be downward. So therefore, let's look at it. Comp better. Then if you look at CBS, comp is better. Therefore, you would subtract. Again, never make any adjustment to the subject property, but always make the adjustment to the comp because the comp is the known factor. A comp is a property that was sold. You know how much they were sold for. So if that comparable property, the comp you are using, if it had, let's say, for example, 4 bedrooms and the subject property has 3 bedrooms, here you can see how you would subtract the value of 1 bedroom to arrive at the value of the subject property, which has 3 bedrooms. Number 13, with the income approach to value, if capitalization rate is decreased and the income remains constant, what is the effect on value? Simply put, so when they're talking about cap rate, you heard that many times. I'm sure if you've ever dealt with any investors, capitalization rate is the cap rate that the investor desires to get back on her or his investment. So in this case, if the property is generating the same income and the investor decides to take more money, more return, that would be basically the value of the property will go up because the cap rate and the value have a seesaw effect. So if one goes up, the other one goes down. If one goes down, the other one goes up. So in this case, the cap rate is decreased, the income stays the same. So therefore, the value will go up. Number 14, what term refers to the amount of money necessary to duplicate an existing building? That would be the reproduction costs. If you are duplicating an existing building, you are reproducing the building. So that's reproduction costs. Number 15, which condition exists when the cost of an improvement exceeds the added value? That would be A, an over improvement. Basically, imagine buying a house for $100,000 and putting in a $75,000 pool in your backyard. Well, in that case, the $75 that you put in the pool will not add $75,000 to the value of the house. It may at best add $10,000, perhaps $15,000. So you can see the cost of the improvement exceeds the value added. So therefore, that is an over improvement. Number 16, how is an appraiser compensated? Well, what they're asking here is, how does an appraiser get paid for his or her services? Well, the appraiser is paid based on the time and difficulties that are involved in the appraisal. You can imagine if an appraiser is appraising a 2-bedroom condo. Well, that is not very time consuming. Whereas if that same appraiser is appraising, let's say, a 5-bedroom house on a half-acre lot, you can see that would require more time and it would be a little more difficult to get that done. Number 17, which term refers to the estimated time that an improvement will be profitably useful? Well, very simple. Look at it. Estimate time improvement will be profitably useful. That is the economic value. Almost every home is built to last a specific time frame. And also, that time frame is really the economic value, the economic life of the building. So that would be economic life. Number 18, what approach is the most often used for the evaluation of a business? Here, the answer would be income approach, because when you're evaluating a business, the business value is truly based on the income the business generates. Number 19, which condition is an example of functional obsolescence? I think I gave you that answer earlier. That would be, for example, a 5-bedroom house with 1 bathroom. You can see that is really, of all the answer choices, that is the only one that would meet that criteria. Number 20, what is the most probable price that a property will bring to an open and competitive market? That goes without saying that that would be market value. Market value is the most probable price a seller will get for his or her property, assuming they understand, they know the value of their property. That is assuming they know. And that's why I recommend you hire someone to represent your interests, or at least to educate you in the process. So market value is what the property in that neighborhood is likely to sell for. How do we know that? Because we have the data that other properties of similar characteristics in the neighborhood are selling for a similar price. And please don't forget to subscribe, share, comment, and like if you find value in this series of videos. And again, as always, I thank you for watching and have a blessed and productive week. Bye.